The economic recovery, the V shape, is effectively priced into markets as we record this on Thursday, June 25th. The S&P 500 is up well over 30% off its lows. It seems that there is very little that can upend this buying mentality on Wall Street. But your views here are a lot more bearish, and you are anticipating an L-shaped recovery, which is a bit of a misnomer because if it is an L shape, then it doesn't really recover, does it? So I'd be really interested in having you lay out your views here.
The way you look at it is you have to still look at, markets is just like economies run in cycles. And if you look at the past decade, as we've known, it's been predicated on low interest rates, which has caused, by central banks, that has caused obviously economic development and along with tax cuts. And that's where we've seen the massive amounts of stimulus, which has fueled growth for a number of years. All that, I do think there's two things you have to look at. One is the economy, as they say, and there's the markets. And from an economic standpoint, even with a vaccine, which, at a bull case, I would say you're talking about 12 months or 18 months from now, you're still going to look at sustainable higher levels of unemployment. You're still going to see a lot lower economic activity. You're still going to see, just less overall activity in the economy in terms of retail, in terms of travel and leisure, in terms of purchases. And when you include that all in to where we've been, to where we are today and where we're going, you have to look at it and say, big picture, we most likely have seen the best days behind us in the past, 5 or 10 years. And going forward, it's going to be a rough road.